So good day guys, and I welcome you to another session of the free class hosted by CF Trading Hub. And in this session, we'll be talking about what order blocks today. So order blocks. What are order blocks? You must have been hearing order blocks, order block, order blocks. So basically, order blocks are the basics of what SMC particularly, and even anything you see on the charts. Order blocks are the basics of it. Order blocks are what? They are blocks that contain orders, just like the name implies. Order blocks, they are blocks that contain orders. So either in buy side orders or in sell side orders, bullish orders, bearish orders. You see them in a bullish scenario, they are what? They are order block, they are block that contain bullish orders. When you see them in a bullish scenario. And in the bearish scenario, it is what? It is opposite too. So there are blocks that contain bearish orders. But just like the name implies, they are blocks that contain orders. So that's just a basic definition of it. But what it is on chart actually. Now, like I've been saying before, whenever you actually are talking about when you're talking about a chart, the first thing you actually do is what? The market structure whenever you enter into a chart. Okay, let's say we do it. No. Talked about demand and supply. Now, this aspect, everything we've been dealing before is what is market structure. This aspect is what? Area of values. So this particular other blocks and different stuff. Now in this particular side of the what? Side of the session, there are what? Their point of interest, or you call them area of values. So there are particular places where you actually expect interest, something to happen in the market. So when you see another block, you actually expect something that's to happen from the other blocks. So that is why it's a point of interest, or you call it what? An area of value. So an area that has value or that contains value. So now, let's say we have what? Like we've been saying before, we have what? We have the demand blocks in an uptrend and everything we've been talking about before. Sorry. So now this particular demand blocks, what you see in them are what? They are POIs and AOBs, your point of interest and area of values. What you see in them particularly are what? Your other blocks and different stuff that are contained in those levels. Now, what is other block particularly? These are another block particularly. Let me just draw it out. It is a two candle formation. Yeah, let me not say it is two candle formation. Sometimes the way you mark out your other block and the scope of what that block is actually what is actually beyond the two block formation. But for now, what you need to understand is the two block formation. The scope of other block goes way long. So, but it's not something you can understand at all. So it starts from what the basics of other blocks just mean. So let me say this is it. Okay. Sorry. Okay. And like we can't do us to have what? It has to have weeks. So let's say this was okay. Mistake. No. Let's say you have these two candles. Let's say this is what we have over here like this. An impulse for an uptrend, a pullback. After the pullback is done, then what? You can see another block over here. And what? Another what? Another impulse. Again. Then a pullback. Then another impulse. Now, what you're about to note over here is this. Another block. Whenever you have a break of structure, like I said, in demand zone, actually what? Sponsors a break of structure, right? This is a demand zone over here. That actually did what? It sponsored the break of structure over here. It sponsored the break of structure we had over here. Now, that particular demand block, there is actually an area of value, a point of interest, something that interests us inside that particular demand block that actually made us pick it to actually be a demand block, to actually see price buying off it and a break of structure from there. Now, those particular things are what we can see. Maybe another block is there or whatever is there. Now, this is another block over here like this, and I'm marking it out again over here. The moment price reached for that other block, what happened? You can see the next block of structure. Now, what am I trying to say is whenever you see a pullback happening, you want to actually know wherever your other block is and what, and mark out that other block before price actually reaches there. So you expect when price reaches for that particular other block, it actually does what? Sponsors the next block of structure. And that is basically what other blocks do. Like I said, there are blocks that contain orders. Whenever something contains orders, that will mean whenever price reaches for that particular block, those orders get triggered. So when the bullish orders over here, when they get triggered, what happens? Price what? Price starts buying and moving up until what? Until it sponsors the net break of structure over here. So that is basically what the other block is actually about. They actually what? They actually the last bench of bullish candle before what? Before a momentum break of structure. And when I mean a momentum break of structure, I mean just basically this what? This particular impulse over here. Let me mark it out so you can see. So this particular impulse over here is what I mean. Now this particular impulse again over here. This particular impulse again over here. And so when price reach for this particular demand over here, it sponsored the next block of structure over here. When price reach for this particular demand, the second demand too, it sponsored the next block of structure. And you can see it is what? It's tagged. What is being tagged in that particular demand? Our other block. So basically, other block what? Sponsors the next break of structure. And whenever you see a break of structure, another block must have been left behind. So that is something you're supposed to know also. So now, whenever you see this particular break of structure over here, this particular break of structure, let me burn it so you can see it better. Yeah, this particular break, let me just play some things over here so you can get something. Okay. When this particular break of structure happened, now it happened over here. The moment it happened, an other block, this particular second other block has been what? Has been left behind before the break of structure happened. So the other block has formed before what? Before you see a break of structure. That will mean whenever you see a break of structure, another block has been left behind before a break of structure can happen. So whenever you see a break of structure, another block must have been left behind, and that is what you want to key into. So whenever you see that particular other block, you want to actually map it out and expect when the price pulls back into it, what happens? When price pulls back into it, it's sponsors the next break of structure, which will be over here. And now when this particular break of structure happens, what do you expect again? There's actually what? An other block that must have been left behind over here too before that particular break of structure happened. Another block that must have been left behind over here before that particular break of structure happened too. So, and what's the expectation? The expectation will be what? The expectation will be a pullback onto that particular other block again too, and what? And another break of structure. So simple. Now, the next thing on the list will be what? How to mark out that particular other block. But I think I've explained well what you are looking for, your other block, and everything about like what another block means, what you're supposed to look for it, how it's supposed to be. Whenever a block of structure happens, another block has been left behind. And another block is a block that contains others. So whenever you expect to pull back into that particular other block, it means what? Price actually does what? It triggers a set of orders when the other block gets mitigated. And I explain the meaning of mitigation to you. Mitigation means when orders are triggered in the market. So whenever you have a block and that particular block has not been mitigated, has not been touched, that will mean it is unmitigated. But the moment it is mitigated and touched, that will mean what? That particular other block has been nullified because it has done its job by what? By triggering the next set of orders, the next set of bullish orders has come into place and broke structure. So whenever you see a break of structure, another block must have been left behind. So whenever a pullback or correction comes after that particular break of structure, it taps into that particular demand or whatever it is in there. Maybe another block is in there and what? And sponsors the next set of delivery. So how do you guys get that? Now let's talk about how do you mark out another block. So let me remove all this stuff over here. Okay, let me go draw another one. Now, other block. Whenever you hear the word order block, it is what? It's two candle formation. That's the first thing you want to note. An order block is what? Is a two candle formation. That's the first thing you want to note. Now, the first candle is what is called the source candle, and the second candle is what is an engulfing candle. Whenever we mean an engulfing candle, you can go onto your Google and search for what engulfing candle pattern. Engulfing candle pattern. Whenever we say an engulfing, that will mean the second candle engulfs the first candle totally. And when we mean engulfing means what? The body is what we want to see. The body of the second candle is what we want to see engulfing the body of the what? Of the first candle, not the wicks. So let me actually do this scenario. Now see the scenario over here. So you can see the body of the first candle of the second candle over here engulfing the body of the first candle. And by engulfing, I mean it covers the whole of the entire body of the first candle. That is what engulfing means. So you can go onto your Google or Safari and you can search for engulfing candle pattern. So you can see it over there. But the candle, the wicks don't have to engulf each other. They don't have to engulf each other. Just the body is what we want to see. The body of the first candle engulfing the body of the what? The body of the second candle is what we want to see engulfing the body of the what? Of the first candle. And I said the first candle is what? Called the source candle, and the second candle is what? It doesn't have a name, but you want to see it engulfing the what? The source candle. Now, talking about a bullish order block. A bullish order block. A bullish order block has to have what? The source candle for a bullish order block has to be a what? A bearish block. A bearish candle. A bearish candle. And the engulfing candle has to be what? Has to be a bullish candle. Now in this scenario, this is it. Let's talk about the scenario. You can see it over here. These are two candle formation. The first candle over here is what? Is a bearish candle, which is a source candle. And the second candle is what? Is a bullish candle that goes in the direction of your trend. So whenever you want to mark it out, you want to see, that's why you said another block is the last bearish or bullish candle before a momentum break or structure. That definition goes, like I said, the scope of that block goes beyond a lot of but you don't actually understand everything at once. So this is just the beginning of it. So what I'm trying to say is this. This particular source candle is a bearish candle, and the second candle is what? Is a bullish candle. For a downtrend too, the source candle is what? Is a bullish candle, and the engulfing candle is what? A bearish candle. So that will mean the continuous candle you want to see over here what? I might not be drawing correctly, but I'm just trying to make analogies over here. So I hope you can get me better. So with this, I'm sure you should be able to get some things better from there. So these are what? These are bullish candles. That what? Whenever we have a break of structure, bullish candles has to do what? Has to be what gives us the break of structure in an uptrend. In an uptrend. So the source candle has to be what? Has to be bearish. And that particular candle, both the wicks are what? I won't want to mark out as our order block. So let me just mark this out so you can see how to mark it out. We want to mark from the beginning of what? Of the source candle. From the beginning of the wick of the source candle. Not from the what? Not from the engulfing candle. So when you mark out from the beginning of the wick of the source candle, you mark until what? Until the low of the source candle. You mark until what? Until the low of the source candle. And yeah, sometimes you might have what? You might have your wick, the wick of your engulfing candle coming below what? The wick of your source candle. In that case scenario, you want to what? You want to mark everything all together. So that is how to what? That is how to mark out your order block. From the beginning of the source candle to wherever any of the two candles end. That is how you want to what? Mark out your order block. So and you expect, just like I said, you expect whenever the market pulls back into that particular block, it's what? It sponsors the next set of delivery. So these are what? These are bullish order block. Let's talk about a bearish order block soon. So I will use the same color so you can get my analogy. Should I delete this low? So we're in a downtrend. It made a pullback. then a break of structure, then another pullback, then another break of structure. So these are break of structure. I believe by now you shouldn't be having a problem with break of structures anymore. So that is that. Now, the moment you had this particular default break of structure and other block has been left behind, Abi. So that particular other block that has been left behind, we want to mark out our other block. And you can see, as you can see over here, the source candle for a what? For a bearish order block is what? A bullish candle. Yeah, a bullish candle is the source candle for what? For a bearish order block. So, and like I said, other blocks are the last bearish or bullish candle before the momentum break of structure. So that will mean the last bearish candle, last bullish candle over here before you see the momentum breaking structure over here, before you see momentum, that is what your source candle for the bearish order block is. So let's just mark it out. By now you should have gotten all my explanation. So from the beginning of the source candle, you can see how I marked it out over here. So to the end of any of the each candle. So after the break of structure, you want to see a pullback into what? Into that particular. Let me mark this out from, yeah. So you can see it better. Wow. So mark out from your other block. After marking out your other block, you want to see a correction or pullback. I said the same both correction and pullback are the same thing. You want to see a pullback into what? That particular block. If I sponsoring the next downside delivery and seeing another break of structure. And the moment you see a break of structure, automatically what? A new order block has what? Must have been left behind over here. So you want to mark it out again, and after marking it out, you want to see what? You want to see whatever fullback happened into that particular block too, and sponsors what? The next downside delivery. So that is it about what? Other blocks. So if you have any question, you can put your questions through in the comment box in the chat group. So let's go through some examples over here. Now I'm working out our structure. So like I do say, you have to what? You have to be very good with the way you mark out your structure. Because there are a lot of noise. You can see there's a lot of noise for you afterwards. You want to pick your swing points, your swing highs and swing low. That's where you want to pick. So yeah, this is it. Now let's mark out another block over here. This is a block over here. This is a block over here. You can see this is a block. And this is a structure block over here. So these tiny details are something you also want to pay attention into. They are very, very important. So they might be tiny, tiny break of structures, tiny information implies, but you have to pay attention into all those key tiny details. So this is a swing point over here. You can see a break of structure over here. You can see the market tested, came back, tested instantly into this particular block out. One shot another break over here. So now see a break over here 3 out. This is a block over here. None. Initially I said a candle another block is what? Is a 2 candle delivery. It's a 2 candle formation. But you can see one marked over here is what? It's not 2 candles. But still, what you want to put into mind is this. You can see these are a set of 3 candles. The 3 candles over here I marked before marking this particular other block. You can see they are what? They are bearish candles. So those bearish candles, you see a break of structure over here. This is a break of structure over here. And even this a tiny break of structure over here too. The break of this particular eye. So what you want to see is this. You've seen a break of structure. You know another block must have been left behind. What you want to see is this. This particular 3 block formation, if you actually gone to something like a 4-hour time frame or a 6-hour time frame, you see the what they will be submerged into one particular candle. So it doesn't have to matter when you to actually see what to actually see a 2 candle formation. You just have to know how to what to mark something good out. And before you can mark something good out, you have to utilize the basic concept of everything we've been doing before, your structure, your break of structures, everything. So I've seen a break of structure, I've seen an uptrend formation. What you want to do is this. Those particular 3 candles, you want to what? Sum them into one candle. When you sum them into one candle, you want to say the next candle that forms after it what is a bullish order block, and it is a bullish candle, and the bullish candle actually sponsors what the next break of structure. So yeah, this goes to be another block. So it doesn't have to particularly be what 2 candle formation. You just want to understand the information. So price is not something you know, it's something you understand. So I've seen a break of structure, I've seen an uptrend. I can see this momentum before a break of structure, and I can see these are bearish candles. Even if you want to mark out 2 candle formations over here, you can. Yeah, you can. If you mark out 2 candle formations over here, you can still see you are on the line. You're on the line if you mark out 2 candle formations over here. But it's not, you might not actually mark out a 2 candle formation, you might mark out everything together, because sometimes it actually doesn't come in a 2 candle formation. So it's very important to know how to mark out proper order blocks. So after marking it out, you can see what? You can see the next block of structure over here. Now these are another POI, but we've not gotten into it yet. This is a peer value gap over here. That will be our next topic. It's also what? A POI, a point of interest. So you can see the next block of structure over here. After seeing the block of structure, you can see this is another order block over here. Yeah, that's an order block over there. And before that particular order block, you can see what a break of structure actually left that particular order block behind us. And you can see the market coming to that particular order block, and what the next break of structure is what was gotten. So a pullback might happen over here, and can pick what this as the next order block over here. This is a new order block over here. So a break of structure has happened. A break of structure has happened. Now we can do what? We can see a pullback into this particular block, and what? Now this is not a trade what? This is not a trade idea. Don't get it wrong. This is not a trade idea. Don't get me wrong. Anything I do in class is not a trade idea. So this is just what somehow an expectation. This might not actually be my expectation, and that's what I'm just trying to teach you other blocks over here. So now I pull back into that particular block, because whenever I want to make analysis, I use my information and leave, to make analysis. So you are just what? You are just at a starting point over here. So, and yeah, you can finally pick up this as another block, and what? And see to the next vertical structure over here. So now, how do we create this particular other block? So what you want to do is this. You want to go to your position tool. So let me just do this. Now I'm using when you go onto your phone screen, later we'll be talking about trading view chart tools and how you can use them. But for now, let me just go through the particular tools over here. Now this is the tool I want to use. You see, these are projection tools. So actually there are actually a lot of tools over here. What you want to do is what? Use a long position tool over here, because you are looking to what? To long a position. A long position tool, and I place it over here. I can pick a target over here. My target is what? The next high. Where I expect the next break of structure to happen is what? Is my next target. And your stop loss slightly what? Below the other block. Or you want to place it what? Below the next low over here. So you can place your stop loss over here below your net low. Now, talking about stop loss placement, these are things you also what? That require expertise, and you have to know how to manage the trade. So, but that's for later. So over here, I'll place my what? A stop loss slightly below what? Below this particular block. Because this particular block is actually what? The invalidation what? Level for this particular setup. So this what? There's something like a setup big when you trade that there. So you can just come up with. So now another example. Let's go through my examples so you can see over here. So but I want you guys to go through examples and get to in the chat box and comment in the chat group so I can see what you are learning and how to make corrections on whatever you have problem with. So there is always a lot to actually stay through. Over here is a block too. So it might not be a block. In this particular time frame, this is not a block over here, but when you go on towards, so probably an hourly time frame, this is a particular block over here that I picked initially. And to actually trade it, like I've been saying, actually just place your position tool over there. Place your position tool over there and what? Put your stop loss slightly above your other block, which is the eye of this particular eye. The particular eye over here. The eye over here, yeah, that is very precise. It's slightly above what? Slightly above that particular eye. And what's your stop loss? No? Your TP, the target. Like I said, target TP means what? Target objective. I think we've done everything like that in this class before. So you want to what? Place it at the next part of this low. And you can see what? This what? 7.96 RR setup. So that is just how you use your other blocks. You just want to what? You want to see a part with break of structure. And this is what? The break of structure over here. You want to see what structure are you dealing with? Is it a bearish structure, a bullish structure? A break, you want to a bearish structure, a big or a bullish structure. After that, you want to see what whatever is happening implies where the next break of structure is, where the last break of structure is, where a good other block is, and everything like that. So those are just the information you need. So you just go through on your chat and see what you can find, and drop your finding in the chat box. If you have any question, you can always ask in the group and be attended to. So that is it about that block.